Hello, everyone, and thank you for joining us. Today's webinar is being co-hosted by the New Mexico Small Business Development Center and the National Association of Women Business Owners, New Mexico. My name is Anna, and I'm with the New Mexico Small Business Development Center. We have our Executive State Director here with us, Russell. Would you like to introduce yourself?
Yes, thank you, Anna. My name is Russell Wyrick. I'm the Executive State Director of the New Mexico Small Business Development Center Network. I want to thank you so much for being here and thank our partners, the National Association of Women Business Owners in New Mexico and the New Mexico Finance Authority. So grateful for our partners that we were able to come together to provide this for you. The SBDC is here for you. I want to thank all of the business owners that are on today and all of the individuals that are kind of planning on starting a business. We saw several of those that had registered. So again, thank you so much. We recognize the hard work, energy, effort, blood, sweat, and tears that you've put in over the last year and a half in business survival, and we honor you. We thank you. We know it takes a lot, and we know the late nights that you've probably spent worrying about how you're going to make payroll, how you're going to keep the doors open. And we just want, we do value you. We're grateful for you here in the state. Also, we have several veterans on the call today. We want to thank you for your service and tell you how much we appreciate you because of your sacrifice in our freedoms allows us to enjoy the opportunity to pursue entrepreneurship. The SBDC is here to help you and support you. Our mission is to develop skilled entrepreneurs and strong businesses. At the end of the day, what's going to make a strong business is the entrepreneur behind it. So you've come today to hear specific information, but what I want to encourage you to do above everything else is to undertake the journey to become a skilled entrepreneur. Begin the pathway of setting aside time every month to focus on working on your business, not just in it. So you have the things that you do in your business, but take the time to set aside to figure out how can I better run my business? What products or services do I need to add? How do I need to change my pricing or my sales process? What experts do I need advisors do I need to reach out and get on my team to help me make better decisions? At the end of the day, that ultimately is what determines business success, is taking the time to look at the bigger picture. So I want to encourage all of you to do that, utilize the resources available for you in doing that here across the state. But again, thank you so much for your participation in this. We're here to help you. You can visit our website at nmsbdc.org. We have coverage covering the entire state. Every county is covered. And we have business advisors that will work with you one-on-one and undertaking that journey to become a good entrepreneur and equipping you to do that. And there's no charge for those services. So again, thank you so much for being here. Anna, back to you.
Thanks so much, Russell. We also have Krista Martinez joining us from the National Association of Women Business Owners, New Mexico. Krista, is there anything you'd like to tell us?
Yes, thanks so much for having us. My name is Krista Martinez. I serve on the board of directors of the National Association of Women Business Owners here in New Mexico. And if you have not heard of NAWBO before, let me just share some information with you about our organization. NAWBO propels women entrepreneurs into economic, social, and political spheres of power by strengthening the wealth creating capacity of our members and promoting economic development within the entrepreneurial community, creating innovative and effective change in the business culture, building strategic alliances such as this, coalitions and affiliations, transforming public policy and influencing opinion makers. Here in New Mexico, we advocate on behalf of 60,000 women business owners across the state. I'm going to put my contact information in the chat. If you want to learn more, I'd be happy to schedule some time with you. We're thrilled to be partnering with NMFA and SBDC on this in this webinar. There's so much work happening to support business owners across the country and here throughout the state. We're just adding to that value. Thank you.
Thank you, Krista. We are pleased to introduce Marquita Russell, who is the CEO at the New Mexico Finance Authority. Marquita will be presenting Last Chance to Apply Business Recovery Grant Program. We will be using the Q&A function to take questions, and we'll answer questions at the end of the webinar. Please utilize the chat feature for any technical issues you might experience. Thank you so much for joining us, and without further ado, I'll hand it over to you, Marquita.
Great. Thank you very much, Anna. And thank you, Russell and Krista, for inviting us into this partnership. We appreciate the support, and very grateful to have the opportunity to talk about the Business Recovery Grant Program. I am joined today by Lynn Talby, who's our Communications and Outreach Manager. She's managing the Q&A section of this, but I want you all to be aware that she's a resource that's available to you should you have any additional questions as well. I'll start right in with the Business Recovery Grant Program. This may be a program that you know a little bit about. It was created by the state of New Mexico as part of the regular session in February of 2021. It's a $200 million grant program that's funded by state dollars to help businesses that were hit hard by the pandemic. Grants are available for up to $100,000 for New Mexico businesses. Our application deadline is December 7th, so it's sneaking up on us here. Our average grant award right now is $50,000, and it's be very clear here, the grants do not need to be paid back. Priority will be given to those businesses that experienced the greatest revenue decline for any quarter or year between 2019 and 2020. If you have heard a little bit about this, you may have heard about it through the phrase LEDA Recovery Grant, and LEDA is the Local Economic Development Act, and that's the statute under which this program was developed. So if you heard about a program or even applied to the LEDA Recovery Grant, we're talking today about the same program. So eligibility requirements for this program is that you have to have at least one employee, either full or part-time, and fewer than 75 employees per business location. So if you operate two businesses, even if they are operated through the same tax ID number, you can qualify for a grant per location. Unfortunately, independent contractors are not considered employees for purposes of this program. It gets back to the statute under which this was created. So contract employees are important, but they don't help you meet the eligibility requirements for the Business Recovery Grant. You need to have demonstrated that you've reduced your staff either through reductions in force, staff hours that were cut back during the pandemic, and that you're now in the position to hire back or increase those staff positions. If you experienced a revenue decline, even $1, it qualifies you for the program. And again, it can be any quarter from 2019 to 2020, any similar quarter, or you can even just compare the years of 2019 to 2020. As long as you've experienced a revenue decline, you're qualified for the program. And then lastly, and I think importantly, the last piece that's important to remember is though you are determined eligible based on jobs that you create or additional hours that you create. The actual dollars are used to cover rent, lease, or mortgage on your business property. So it can either be a vertical building or it can be, if you lease a parking lot, for instance. That all qualifies, but you have to have a lease or rent agreement on that property or a mortgage on that property, and you can use the dollars for past due, current, or even future rent or mortgage payments. And again, obviously, you have to operate in New Mexico. This is for New Mexico businesses, and the definition here is that you've got your physical presence in New Mexico. You don't necessarily have to show New Mexico ownership, but you do have to operate in the state. And we mentioned earlier the concept of contract employees. One of the ways that you can differentiate between an eligible employee under this program and a contractor employee is that you have to report the eligible employees for this program to the Department of Workforce Solutions. Typically that happens under something they call the 903A form, but it could happen through just your payroll service reporting the unemployment taxes that you've paid on those employees. So the awards are going to be calculated based on the number of full-time equivalent employees added after April 1st. And then they'll also be we'll also factor in the revenue loss that you experienced between 2019 and 2020, as well as the average wages you're going to be paid. The grant can be used, as I said earlier, for lease, rent, or mortgage payments. So what we'll be looking for is evidence that you paid that rent, that lease, or that mortgage, and then we'll reimburse you for those payments, and then you can use those funds for any other purpose within your business. We will be dispersing at the time that we close the grant agreement. When you as a business owner sign the agreement and I sign the agreement, we'll be sending out 25% of your grant award right after that document gets closed or signed. And then every quarter, you'll be able to submit a reimbursement request, and we'll be dispersing the amount based on the net new jobs that you created, again, after that April 1st deadline. For purposes of this program, an FTE matches the SBA definition, which is 40 hours per week. And so it's prorated based on the number of hours your employees worked. So if you had one employee working 40 hours, that's one FTE. 2 employees working 2 20-hour shifts, that's 1 FTE. Any aggregate amount. So your employees' hours are added up, and then you divide by 40, and you have your FTE. The grant amount is, again, this is where you take into consideration your average, or your revenue decline experience between those quarters, a similar quarter between 2019 and 2020. It can be 2 quarters, 3 quarters, whatever is best and easiest for your organization to submit. That's going to determine your base grant amount per FTE. So if you've experienced a revenue decline of less than 20%, your base grant is $10,000. So that's the minimum amount of grant you can get, is that $10,000 for that 1 FTE. If you experienced a decline of at least 20%, but less than 40%, that base amount goes up to $12,000. Between 40 and 60%, the base amount goes up to $14,000. If you experience decline of at least 60, but less than 80%, you're at $16,000 for a base grant per FTE. And then lastly, if you experienced decline of 80% or more, your base grant goes up to $18,000. What then gets factored on is the average wages that you're going to pay those employees. If your average wage of the new FTEs is $13 or more, it's $1,000 per FTE. And the average wage is $17 or more, then it's a $2,000 bonus, so an additional $1,000. So your grant can be somewhere between $10,000 and $20,000 per new FTE. So we take that calculation into effect and then multiply it by the number of new FTEs, and that's the total grant that you can receive, again, not to exceed $100,000. A little example here on how that works. We're taking Anna's Cafe. Anna was in business in 2019, but she experienced reduced staffing and experienced a 50% revenue decline as a result of the pandemic. So between 2019 and 2020, she showed a 50% revenue decline. As she's reopening the business, she's increasing her hours of some of the existing employees, as well as adding some hours. So her existing employees several of them are going from 20 hours per week to 40 hours per week. And she's hiring 4 new part-time employees at 20 hours per week. So if we break this down, her 4 new employees, again, they're at 20 hours per week. She's hiring them at $15 an hour, and that is 2 FTEs. So 4 employees at 20 hours a week is 2 FTEs. Her existing employees 2 of them are going from 20 hours a week to 40 hours a week at an average of $35 an hour. So she has 1 FTE that's averaging $35 an hour. So her award, because she had experienced a 50% decline, her base amount is $14,000 per FTE. She's getting a wage bonus because the average salary or the average FTE is getting more than $17 per hour. So there's a $2,000 bonus there. So that's a $16,000 award per FTE, and she's adding 3 FTE. So her total award is $48,000. We will be going through a little calculator at the end that's on our website to help you get to that a little easier, just to make sure that we all are on the same page about how that works. The application process is started on our website, which is nmfinance.com/recovery. I'll be using that website frequently. It's a really great place for information about the program, any resources. We have videos there to help you should you get stuck, way to find out who to call. So nmfinance.com/recovery. There you'll be asked to create a username and password. Keep hold of that information because you'll use it frequently. You can go into the application, start it, save it at any time, come back, upload documents, get back out, ask questions through the application system. So be prepared to utilize that application password and username fairly frequently, as everything will come through that. We encourage you to get your documents together before you start the application, because there are specific pieces of information that we're going to ask you for from the documents that you're collecting. As I mentioned earlier, all the information that we provide to you will be coming in and out of that application portal. And the reason we do that is because it is a highly encrypted and secure application system. So emails that come in and out of that system are in fact encrypted, and therefore they're not subject, it'd be very difficult for anyone to get a hold of that information. So you're submitting confidential and sensitive information to us. We want you to know that we take that very seriously, and it's been put into a system that's highly secure. In addition to which, we're asking you for information to ensure that we know that you are who you say you are. We want to make sure that some fraudster has not gotten a hold of your information and is submitting then an application on your behalf. So we have built into the system several layers of security so that you know that we are taking this very seriously, and we want to make certain that someone else has not come in with any part of your information and pretended to be you. So you'll see us asking for things like your ID so that we can verify that against massive databases that show whether or not there's been large amounts of fraud or unusual activity on things like your driver's license number. And again, I'll take you back to that grant calculator and even a eligibility screener that's on our website to help you get ahead of the application process as well. So that is a good place to start, nmfinance.com. As soon as we go over some of the required documents, I'll take you through that website. So importantly, you'll need either a 2019 or 2020 federal tax return, and that is to show the kind of business you are, to ensure that you're actually operating in New Mexico, that you show that you've been paying employee wages, and one or other is needed. We don't accept extensions on that, so you'll need to have filed those tax returns. We'll need to see a copy of the rent, lease, or mortgage agreement that you'll be asking for reimbursement on, and it needs to show that you either had past due amounts or that you have still amounts due on that rent or mortgage agreement. So for instance, if your mortgage pays off at the end of this year, December of 2021, we won't be able to reimburse you for any mortgage payments that come after December 2021. So we want to make sure that you have enough money left on any of the agreements to cover the amount of grant that you're being awarded. We'll also need to see some evidence of that revenue decline. You can do it a couple of different ways. You can get for us a copy of your CRS reports that you filed with the Department of Taxation and Revenue. So again, we'll need a full quarter. If you report quarterly, you'll just give us those two documents, the same quarter for 2019 as 20. If you file monthly, then you'll need to get us the same 3 months to make up that quarter. So however it is that you report your revenues to the Department of Taxation and Revenue, that'll work for us. It may be easier for many of you to just simply give us copies of your 2019 and 2020 federal tax return. That way we can just look at the decline of revenues. That's very simple. So that's available to you. And then there are going to be a few instances in which a business opened maybe in October of 2019, and you won't have good information about, you know, you won't have clean month results for like October to October. So we encourage you to call us at 992-9696. That's at 505. That's a hotline where we have about 15 to 20 funding coordinators taking your calls to help you through the process. There is a way for you to still qualify for that program, even if you don't have a complete 2019 tax return, or that is to say a full year, or a full quarter of CRS reports. I mentioned earlier that you're going to need to show us some documentation that shows that you've been reporting your employees to the Department of Workforce Solutions. Typically, that is done through this Department of Workforce Solutions Form 903A, and we're going to need that information to determine your baseline. So we keep talking about new jobs that were created, but your baseline can be drawn as of December 31st of 2020, or can be used as a March 31st of 2021. So we need to establish a baseline, and we need to see that that what your highest number of employees were during the pandemic, because we're not trying to increase the number of jobs that your organization had. We want to make sure that we get you up to the levels that you were operating pre-pandemic. So we're going to ask for your lowest and your highest employee count during that time period. And the form itself does not actually tell you the number of employees. It just tells you the people that were employed and the gross amount of wages paid on them. So we'll need to get some additional information, supplemental payroll information, to help determine how many actual FTEs that is. So again, if you file the 903A form, we'll be asking you for some supplemental payroll information. If you go up through like a payroll company, they'll be supplying you with aggregate information, and typically we can get everything then through that document. So there are a couple of different ways to establish what you actually reported to the Department of Workforce Solutions for those quarter ends. Mentioned earlier that we're going to need to see a driver's license from the individual that's submitting the application. And all the documents that we're asking for, again, are going into an encrypted and secure environment, and they'll need to be in a form that's not executable. So PDF, JPEG, I think there's one other form that's eligible, but we can't accept documents in the application system that are able to have executable commands in there. So it'll be PDF and JPEG predominantly. All right, so I'm going to take you here in a minute to go to nmfinance.com/recovery. Again, the application is December 7th, and we have a handy dandy counter on the first page of that website so that you can see how long before you have to submit your application. Again, I will need to focus on the fact that you can have more than one application per business location. So if you have different tax ID numbers, you'll be creating different accounts for those businesses. If you have one tax ID number, you'll have one account, and then you'll need to contact us to tell us and provide us some additional information to evidence that you have more than one business operating under that tax ID. So if they report up through one company, please get in contact us after you've created your account. There's you can start a case. It's called case management. You tell us that you need to get an additional application available to you. We'll ask you for some supplemental information to demonstrate that, in fact, you do legitimately operate two companies through one ID, and then you'll be granted access to do that. We'll be reviewing the applications in the order in which they're prioritized after the application period closes. I would tell you right now, though, of the $200 million that's been made available, we have $150 million still remaining. So you have an incredible opportunity if you're a business or nonprofit to get funding through this grant round. We need to see probably 3,000 applications totaling an average of 50,000 before we start to have more demand than we currently have funding available. So this is really a worthwhile effort on your part to look and see if you're eligible and how much you can apply for. You'll be checking after you submit the application. You won't see anything formal to us until the end of that application period, but we are starting to process applications. We may have additional information we'll want to see. So though you won't hear an official answer from us, we will be asking questions prior to the end of that December 7th round. So if you submit early, we can start processing the application and looking at it to make sure that it's complete and that we don't need additional things. So we encourage you, though you have till December 7th, to jump on it so that you're not having to scramble in early December when you probably have other business things that are pressing and need your attention. And should we reach that point where we have more demand than we have funding available, then the priority will be based on the percentage of revenue decline that you experienced between those same time periods of 2019 and 2020. Okay, so this is the application place. The core place is nmfinance.com/recovery. There are a couple of other ways to get information from us, and that is to call our hotline number, which is 505-992-9696. That hotline, that help desk is open between 7 a.m. and 6 p.m., Monday through Friday. Operators are available in both English and Spanish. If you need specific questions answered before you start an application and aren't in a position to make that phone call, then email us at recovery@nmfa.net. And we have those same funding coordinators answering questions through that email as well. So you can call us, you can get into the application you've created and ask your question through the case management system, or you can email us at recovery@nmfa.net. So that's 3 simple ways. The other easy way to do this is to go to the website and look at some of the resources we have available there. And I'm going to need to see if I can figure out how to do this. Change over to our website. So nmfinance.com/recovery. Again, we have Lita@nmfa.net as well. It's a place where you can ask questions, 992-9696. So there's some basic information up there. But let's go through the eligibility calculator. It's the easiest way to determine whether you are able to submit an application. We don't want you using your time unless, of course, you're eligible to receive a grant. So the first question, does your business or nonprofit organization operate in New Mexico? Yes. So does your business or nonprofit have at least 1 full-time employee or part-time employee, but fewer than 75? And again, that's based on the location of that business. We'll say yes. Did your business or nonprofit organization lay off employees or reduce employee hours due to the pandemic? Yes. Is your business or nonprofit organization current on all state and local tax obligations? This is an important one. This is absolutely statutory. We can't get around that. And we'll be pulling reports that will indicate whether you have liens outstanding on your property, that sort of thing. So we're going to say yes. And did your business or nonprofit experience a decline in business revenues between comparable quarters in 2019 and 2020? Let's say yes. So it's going to tell you that you should apply. You've met the 5 basic criteria. And here are the documents that we just went through that will tell you that you'll need to have gathered before we get started. We can also start our application here if we've already created an application account. Maybe we did so as part of the Small Business Recovery Loan Program, which the Finance Authority also operates through this system. You can go in and continue your application. But the account is going to be logged to your tax ID number. So if you've already started an application for one of those two programs, go back in and continue the application. The other thing that this will tell you is that grant funding calculator. So we're going to, let me increase this so you can see it just slightly better. We're going to estimate the percentage of revenue that we had, and I had a 50% decline. I am going to be paying my employees between $13 and $16 an hour, and I have 5 employees. Well, let's do 5.5 just for fun. My award is $75,000. So again, you would be in a position to get a total of $75,000 should you create all 5.5 new FTEs, and the new FTE is after April 1st. So your baseline is either end of December or end of March, but any employee that you then add over that amount after April 1st is then eligible to count against your job creation requirements. You have until March 31st of 2023 to evidence that you have fully met that goal. So we're going to ask you in the application for a 1-year target of the number of employees you're going to meet. So that's the April 1st of 2021 through March 31st of 2022, but you're given through March 31st of 2023 to fully create those jobs. We understand that business isn't as we always want it to be, and it's not always as predictable as we'd like it to be. Or even that if you want the employees but simply can't find the qualified employees that you're looking for. So this program gives you an additional year to create the jobs that you said you'd create in that first year. So give us the plan, what you plan to do, be as optimistic as you can through March of 2022, because you then have the additional year to fully employ those individuals. Again, you'll click here to get started should you want that. And then lastly, in addition to the application deadline, you can go down to our website and get a lot of really good information. This goes back through the documents you'll need. It gives you easy hyperlinks to get to additional information. It gives you general program FAQs, frequently asked questions, and videos on how to submit the application. Again, if you're not able to ask us during that 7 a.m. to 6 p.m. hotline, we have some great videos. They're about 2 minutes each about how to create the application, and it goes section by section. So you can see here there are 8 sections that are asked in the application, and you can pick either any of these, and they'll show you a video on how to get through that section, you know, what we look for. And again, if you are still needing information, please give us a call. How to get through technical assistance, which very carefully tells you to go through the New Mexico Small Business Development Centers. We believe these organizations to be some of the best resources in the state to help your business prepare for what comes next. So a really important resource there. I think because you're here today, you already know that. And then it'll tell you kind of what happens once the application gets started. So with that, that is our website. It is full of information that's going to be helpful for you as you try to, as you start to submit this application and get your information together. And I will turn it back to our handy dandy page here so that, whoops, so that you have the information about where to go should you have questions. And I will start questions.
Thank you, Marquita. There have been some questions coming in on the chat function. One of the questions is this the same grant as the LEDA recovery grant? And if it is, can I apply again? And that's sort of two-pronged. If I got a LEDA grant, can I apply again? And then the other part is if I did not get a LEDA grant and was either declined or just started my application, can I go back in and apply for it?
So the answer is that your business is eligible to receive up to $100,000 per location. So if your initial application did not include all the employees that you were going to be hoping to hire by the end of March, and it wasn't as optimistic as you think it is now, you can get in contact us and we'll see if we can open that application back up for you. If you only applied for one location but have others, certainly get in touch with us so we can get you access to an additional application to apply. And then if you started the application but never submitted it, then please get in touch with us. We'll reactivate your application so that you can finish it and get that submitted. But it's the same grant. It's the same requirements that you have to have, have employees that you report to the Department of Workforce Solutions, and not 1099 employees. That seems to be the biggest issue for businesses moving forward, that they have independent contractors working for them, but they don't pay unemployment taxes on them and therefore aren't reporting those wages to the Department of Workforce Solutions. So did I answer that one, Lynn?
Yes, thank you, Marquita. So related to the contract employee question, that's another one that's come up. So contract employees do not count. What about volunteers?
Volunteers also do not count. They're important. We recognize that, but the law says that we have to look to the information provided to the Department of Workforce Solutions to verify the numbers of employees you have. So that's why the 1099 independent contractors fall out. And similarly, you're not paying unemployment wages on your volunteers. So unemployment taxes are a really key part of this, because that's the reason you're reporting them to the Department of Workforce Solutions. So unfortunately, volunteers fall outside of that as well.
Thanks, Marquita. The next question has to do with, I think, sort of how the parameters work. So the question is, to qualify, you have to have lost revenue and have added additional employees. So I think maybe if we could walk through the timeline of reducing your employees had to be reduced, and then now you're adding employees.
That's an excellent point. So yes, in order to qualify for the program, you had to have lost revenue between one or more comparable quarters in 2019 and 2020, period. So that is a requirement. The way in which you are determined, the amount that's determined is based on the new jobs you're going to create from either that baseline of end of 2020, calendar year 2020, or the first calendar year quarter of 2021. So we'll get a baseline from one of those two quarter ends. And then any new job that you create, increased hours that come after April 1st are then eligible. So revenue decline happened between 2019 and 2020, and new jobs are starting April 1st of 2021.
Thanks, Marquita. Does a business owner who does the actual work is a business owner who does the actual work considered an employee?
So that gets to how the business owner treats her salary. So if she is an owner and takes a draw and therefore is not reporting her wages as an employee and for which there's state income tax assessed, then she would not be considered an employee of the organization. Several businesses, though, business owners pay themselves as employees, and their wages are included in the reports that they make to Workforce Solutions. And so those business owners are counted as an employee. So it really gets to how the business owner pays herself or himself.
Thank you. This question comes from somebody who started the application yesterday, and she is wanting a description of revenue. Are cost of goods sold included in the revenue figure, or is it just gross sales?
So revenue is going to be gross sales typically. So, but if you want your net revenues, if you had an increase in your cost of goods sold, and then that's made the difference, so your actual gross revenue is the same, but you've had an increased expense, we can consider that as well.
Thank you. That's great. And I think for people also who have specific questions, we have some people who are tax experts in the funding coordinator pool. And so feel free to email the recovery@nmfa.net or call with specific questions like that. I do have another specific question related to revenue though, which is do PPP loans or EIDL loans or any type of grants received during the pandemic count as revenue?
So typically your organization, one of the easiest ways to report your revenue is through the revenues to taxation and revenue. So, and that would not include your PPP loan. It would not include your EIDL loans. So, think about it that way. The gross receipts that you are required to report to taxation and revenue, those are the receipts that we're looking for purposes of revenue. So it should not count in your revenue.
Thanks, Marquita. Another question related to that is, can I apply for this program even if I received PPP loans or the CARES grant or small business recovery loan or any of those other assistance programs?
Yes, absolutely. Yes. So if you received a small business recovery loan as part of the first iteration or even the second one, because that loan program expanded tremendously between 2020 and 2021. So that's a program that's offered by the New Mexico Finance Authority. You're still qualified. If you got a CARES grant and a small business recovery loan, you're still qualified. These are all separate pots of money with separate pieces of legislation. And so you are not shut out of any single program because you accessed another one. And actually, I would mention one thing. One of the eligibility requirements is that you are current on all state and federal tax obligation. I'm sorry, state and local tax obligations. If you find yourself delayed in making your payment to your local government, if you find yourself not able to make your, let's say, liquor license payment, you can take out a loan from the New Mexico Finance Authority's Small Business Recovery Fund. It's the same, you'll access it the same way as you do this business recovery grant through our website. You can take that loan out. It's an amount up to 3 times your average monthly expenses, not to exceed $150,000. There's no interest due on the first year at all. It's not even accrued. Interest accrual starts at the end of the first year, and then at the end of that second year, you have your first loan payment, and it's equal to just interest only. So right now the interest payment is 1.625%. So that loan program, if you are ineligible because you are not yet current on all state and local tax obligations, please take a look at that program. It doesn't have the same caveat. So go in and take a look and see if that will help you get in a position to then apply for the grant program. So that's an important thing that you can do, and you can get through that program pretty quickly. It's about a 2-week process.
Thanks, Marquita. There are a couple of questions about what counts for rent, lease, or mortgage. So one of the questions is, if my business does not pay rent or mortgage, do I qualify? And then related to that is a business that's a home-based business, and they're wondering if their home mortgage would count for the rent, lease, or mortgage payments.
So let's start with, if you don't have a rental agreement or a lease agreement on your business site, then you are not eligible for the program, because again, the money needs to be used to reimburse either for rent, lease, or mortgage payments. So if you're making a payment to a landlord that's affiliated to your organization, so you have like a real estate holding company that owns the property and an operating company that leases from that real estate holding company, you're still eligible as long as the real estate holding company has a mortgage outstanding on that property. So what we need to see is that you're paying some third party for the use of your business location. Relative to home-based, what we've typically seen is that home-based businesses do not have employees, that they usually take an owner salary. So we don't see that a lot, but you'd need to be able to demonstrate very clearly how you've assigned your expenses relative to your home mortgage. So we would need a lot of documentation in order to get there, but I don't know that that isn't possible.
Thanks, Marquita. This next question has to do with employees. So this business was fortunate enough to pay their employees through 2020. So she is guessing that because the wages remain the same, that she does not qualify.
So importantly, the program asks for numbers of FTEs for the baseline. It doesn't ask for wages. So if in fact you had to cut their hours, but because they simply weren't working, as the business wasn't open. So it gets to the hours worked, not the wages paid, for purposes of your baseline. But it sounds as if this business probably didn't cut back the hours or the employees, and so they would not then qualify.
Thank you. This question says, what happens if I project 2 full-time hires by March 31st of 2022 and it never happens?
We understand that. So again, we're going to look to see that you had a reasonable reasonable estimate for that job creation. So again, if you've typically operated with 3 employees and you're saying you're going to create 10, that in our minds is not a reasonable estimation. It's just you can't create more than you've had in the past year. So you're not penalized at all. There's no requirement to pay back the grant should the jobs not materialize as you had anticipated. You only will ever receive that first 25% though. So the important part to remember is the first 25% goes out immediately based on what we believe to be a reasonable estimate of those jobs to be created. And if that doesn't happen, then that's where it ends. If you create some of the jobs, you'll get reimbursed for some more of that funding. But if you don't create all of it, there's no penalty. That money stays available to you again through that last reporting period of March 31st of 2023. So the program has been developed to give you the best opportunity to meet that job creation requirement. It does not penalize you should you not meet them in successive quarters. It doesn't penalize you if you're not in a position to ultimately meet them all. So it's a really safe way to help you get back on your feet. There are no penalties. You don't have to pay anything back.
Great, thank you. This next question comes from a business that applied for the grant but was denied because they didn't have employees before. But starting in September of 2021, they now have 4 full-time employees. Are they eligible for the grant?
Unfortunately, no. Though that business doesn't meet the requirement of the baseline. So you have to have at least a half-time employee and be reporting to the Department of Workforce Solutions on that employee in order to create the baseline. And that comes directly out of the law that created the program. So we do have to see at least 1/2 of an FTE that's been in place before December 31st of 2020.
Great, thank you. This next question says, if I received a loan during the first application process, can I turn it into a grant now?
So that's an excellent question. The grant program and the loan program are disconnected. They are both state-funded programs. They serve similar kinds of businesses and they run, you access them both through our website, but they are entirely different programs. Our loan program, the Small Business Recovery Loan Fund, which I said was expanded tremendously between 2020 and 2021, is got more beneficial terms in that there's no interest due now in the first year, and once principal starts to be repaid, you pay it over 7 years as opposed to 3. So it's more beneficial, but it's still a loan program and never converts to a grant. The Business Recovery Grant is always a grant. So they're different programs.
Thank you. This question is, what if your overall revenue for 2020 was greater than 2019, but there is a quarter-to-quarter loss in some of the quarters? Would that still qualify?
Yes, you have to show, in that instance, you are best suited to show that quarter where you had a loss over the 2019, 2020. So, go in and pick your information. Again, if there's more demand than we have availability, we're going to prioritize based on loss. So, it may behoove you to go in and just see if quarter by quarter there was a quarter where you had the greatest amount of loss. Choose that quarter. Get us the information for that quarter in 2019 and 20, because if in fact we have to prioritize them, you certainly want to show the greatest revenue decline in order to be prioritized highly.
Thank you. This next question has to do with asking if you could go over the plan to hire and how that works.
Sure. So the plan to hire is the amount of jobs you expect to create between April 1st of 2021 and March 31st of 2022. We're going to ask you for the number of FTEs and net new FTEs and the wage you're going to pay them. And that's the information that's going to go into the application. So that's the plan. That's how you are determined eligible and awarded grant money. The actual requirement in the grant agreement is that you create them by the end of March 31st of 2023. So you have an extra year to actually create the jobs that you put in your plan. Now, because we can't disperse more than 25% in any particular quarter, you'll want to make sure that you're at least 50% job creation by the end of September of 2022, because just the way the quarters work. So you want to get to a 50% target by September 30, 2022 in order to, fully maximize the grant reimbursement, but you're not penalized should it take you longer than you expected.
Thank you. The next question comes from a business whose office is located in a casita that they personally own, but they do have a rental agreement and they do pay themselves monthly rent. Are they eligible to apply?
So if the business owners, again, that would be that affiliated landlord, if the casita has a mortgage on it, then yes, they would be eligible to apply. If the casita is fully owned, but the business owner is paying him or herself through a rent agreement, and they also don't have a mortgage on that property, they don't qualify. So there needs to be a third party that's paid with the proceeds of this grant.
Thank you. And related to mortgage and rent payments as well, do the payments have to be past due? Or can a business still be current on their payments and qualify?
So what we're going to do, that's a great question. Thank you for asking it. We're going to reimburse you for rents paid. And so during that time period, so they can be prepayments. As long as you show that you've made a payment to your banker or to your landlord, it can even be for future rent. So that's why we're going to ask for the agreement to make sure you actually have amounts due. And if you make a payment to your banker and it's for future mortgage payments, or you make prepaid rent, all of that can be reimbursed. So it can be past due, current, or future rent or mortgage payments.
Thank you. This business wants to know if they would qualify. They do have a loss of revenue, but they only have several part-time employees and no full-time employees.
So yes, they're still eligible. We're going to be looking for net new FTEs. And as you may recall, FTEs are determined by the number of hours your employees work in aggregate, then divided by 40. So you could have an entire crew of part-time employees, and then we'll determine the amount of full-time equivalents by dividing those aggregate hours by 40. So yes, absolutely, please apply.
Great. And there are a few more employee questions. One is, if you hire to replace an employee that's left, is that still considered a new employee?
So we're going to look for net new FTEs. If that employee was there at the end of June, for instance, and then left in July, and you replace that person, you're still going to have the same hours worked. So it's not based on the faces that show up to your office, but on the net hours paid out. So it will you won't be penalized at all for having lost that employee. But if it's, you know, one new person filling a former employee's spot, then that's a net zero. So that new employee, the new face, won't count for a net new job because in fact it's already, that job has already been counted in the numbers.
Thank you. And this question is from a tax office that hires additional employees during tax season. Would those seasonal employees still be considered FTEs?
So again, you're going to have to show them over 4 different quarters that you increased the hours. If in fact you expect to see increases in seasonal workers over time, then it would probably work for you, but it's not really designed for seasonal employees. So I look at some businesses that may be based on festivals or something that are just now coming back. And maybe the first year you had some employees, but not your usual amount. But by 2022, you're expecting that to come back in bigger numbers. It might work out that way, but the kind of seasonal employment that I think is described is basically the same swell of employees each year. And you won't get to that. You won't, since we only disperse 25% on any given quarter, you're going to have a hard time getting those numbers to the point where you could get fully realized for that. So it probably won't work there, but give us a call. Let's see if we can work through the numbers.
Thank you. Related to that is a question about FTEs that were hired before April 1st, 2021. Do those count? Can they include FTEs that they hired in the past year before that date?
So your baseline is either the end of March of 2021 or the end of December of 2020, right? So we need to determine the baseline so that the net new jobs are included. If your job is still in place, so you choose December 31st of 2020 and those jobs are in place in May, including this individual, then you'll have a net new number. The plan runs from April 1st through March 31st, but if, you know, it will, I think you're going to be in a position to include that person as long as that person continues throughout the next year.
Great, thank you. Another employee question. If the employees that you had were contract employees, but now you want to make them actual employees, are you still eligible?
So as long as you've had at least one of those, you know, at least a part-time employee of some sort, and you've been submitting that wage information to Department of Workforce Solutions, you can convert your contract employees to permanent employees and take advantage of the program. But if you had no employees whatsoever because they were all independent contractors, then that's not going to work because we won't be able to establish a baseline.
Thank you. This question says the owners are paid a salary, so do we calculate them as FTEs at 40 hours per week?
So you're going to need to tell us how many hours you work. The 40-hour per week, you know, some people open their business for 35 hours per week, some for 40. We're not going to get into that number. If you tell us that they work 40 hours, they're salaried positions, and they work 40 hours, then we will take that at face value.
And since they're the owners, it would only be if they pay unemployment tax on themselves. Is that correct?
That's correct.
Okay. I had a question about mortgage and rent. And this says, if I had to store the equipment in a storage facility during 2020, will that count for mortgage or rent, the storage contract?
So The mortgage or rent. So mortgage, I think that's fairly self-explanatory. I think the difference between rent and lease is the time period. Generally, leases are longer term. So if you're still using that facility to operate your business, then it would be included because you could then get reimbursed for the cost of that space. A storage locker, I think might count if it were part of a like an internet kind of business. But generally speaking, if you just had to store some stuff there because of transition, that would not work. So we'd have to specifically look at the kind of business you operate and whether or not that storage locker is considered a business location.
Thank you. This question is, I'm self-employed and have one employee, and we were closed for 6 weeks in 2020. I've been able to retain him, but haven't hired any new employees. Do I qualify?
It doesn't sound like there are any new jobs that are being created. And so, no, if you're creating additional jobs, then no, even still, you can't go beyond your last year number. So no, unfortunately, that would not qualify.
Okay, and a similar question, but slightly different situation. A solo entrepreneur who has greatly reduced revenue, who does pay unemployment taxes, but isn't quite sure how they're filed with DWS. It sounds like one of the questions is how do they know whether they're filed with DWS? And then if they are, would they qualify?
So if they're going through a payroll or a bookkeeper's doing that information for them, they'll be looking on the payroll information about how much was paid for state unemployment tax. So that's what you're looking for. If you're paying unemployment tax, then you are in fact reporting to Workforce Solutions.
Great, thank you. And then just one final question that I see is, if somebody wanted to see the actual application before they started it, is there a place to go to see that? Possibly the videos or...
I think the videos, Lynn, are probably the best place to go because not only do you see it, but you can get a really good understanding as to what's being asked in each of those areas. So again, those videos are about 2 minutes each. They're not particularly long, and they're really quite helpful because they show you the actual page in the application. So each of those sections is covered in detail.
Great, thank you. And that is it. I think there are no more questions in the Q&A or in the chat box, unless anybody has anything else.
Lynn, thank you so much for, I was going to tell you that there are some questions in the chat, but it looks like you've monitored that as well as the Q&A. So thank you so much for doing such an excellent job with that. It looks like some additional questions are coming in, and then we also have a phone-in caller, and I'm going to allow them to talk real quick, just in case they have a question. So you do not need to talk if you don't want to, but I am going to enable that for you right now. And then you'll just have to unmute yourself should you want to ask a question. So go ahead and do that now. We'll give you just a couple of seconds, and if not, we'll proceed with the other questions. I'm going to ask you to unmute here just in case. Okay, so I don't think that person has a question, so we'll just go ahead and proceed with the 2 additional questions in the Q&A. Lynn, I'll let you handle that.
Great, thank you, Anna. One question is, what if I paid off the mortgage in 2021?
So we'll need to see that you're making payments that are being reimbursed with the grant. So if you've paid off your mortgage, then you don't have any additional expenses. You're going to have a hard time meeting that requirement. So I think it would depend on when you paid off the mortgage and how much that was. So that's, I think, going to be a one-off question. You will need to talk to you directly.
Thank you. This last question says, we're self-employed and only file a 1040, and only myself and husband are in the business. Do they qualify? No,
Unfortunately, that is an instance in which the owners are taking the salary taking their salary through owner draws or through distributions to owners and not being paid a salary. When their salary is being reported to workforce, yes. When it's not and it's simply a 1040, then it doesn't work.
Thank you. And there's another question. If you used a credit card to make your rent payments, hoping for a better future, does that count?
Again, it'll be based on the timing to show that you've made the payments. So we need to look at that. You know, these are really good questions, but they are very specific to a fact pattern that we need to get more information on. So please give us a call on that.
Thank you. Does it matter how the rent or mortgage payments are made, whether they're made by check, cash, credit card? Do we look
No.
at that?
No, we are going to look for evidence that you paid, that your landlord was paid. So it won't matter the way in which you paid them once we're in that grant agreement. But, you know, again, if you're trying to get paid for something that happened back in February, that's going to be a problem. But if you're paying via credit card now, your current rent, or you want to prepay using a credit card, all that would be fine, because it'll show that you made the payment.
Thank you. Let's see. There's one question asking if we do have any programs or grants for businesses who are sole business owners.
So the CARES recovery program was the only program so far that's for a grant that pays what we call non-employer businesses, the sort of sole proprietor, mom and pop shops, independent contractors. That program was a one-time program using federal funds. I'm not certain whether or not additional federal funds will be dedicated to grant programs. From the state side, we're pretty limited in the ways in which grants can be made using state dollars. One of the only ways it can happen is through this Local Economic Development Act, and that requires job creation. So if it's going to be continued state dollars, I don't think that that's possible. It would really depend on if additional federal dollars are made available for such a purpose.
Thank you. And then one last question to confirm. To show a loss, it can be just one quarter. It doesn't have to be the entire year. Is that correct? That's
correct. It's one quarter. All we need for sure is one quarter, and it's corresponding quarter in 19 and 20. So just choose a quarter. That's fine. If you don't report CRS, that's going to be more difficult. We can certainly work with you, but if you report to your receipts to taxation and revenue, that'll be very easy. You can just pull up your CRS reports for those same time periods. If you don't do that, then you'll need to provide us with additional like bank statements and things like that. So you'll need to get in touch with us in order to report quarterly wages that are not CRS based. So there's a way. It's just a little longer, and so we'll have to walk you through that.
Great, thanks. And one last question was, this person wants to create more jobs, but doesn't have the funds to pay them. And so I'm going to put in the chat here information about looking at the New Mexico Economic Development Department's pandemic recovery related programs. And so everybody can look for that. But I don't know if you want to talk a little bit about the loan program as well, Marquita. If they don't qualify for the grant program, then they might qualify for the loan program.
Yeah, and that's an excellent point. It takes money to create the jobs and then get reimbursed. We understand that there's a disconnect in the timing here. So after the first payment is made to you, everything is done on a reimbursement basis, which does mean you have to have money to get the money back. I would encourage you highly to take a look at the Small Business Recovery Loan Fund. Again, it changed a lot between last year and this year. So even if you were funded last year, you have an opportunity to get additional funding this year. So take a look at that program. Again, that is interest-free. There is no accruals on interest in the first year. After that, it's interest only for 2 more years. So it's a full 2 years before you even make a payment on that loan. That may give you the seed capital necessary to hire the job so that you can then show that you paid them. So they work very well in tandem. And because it's interest-free for the first year, there's not even a cost to borrowing those dollars. So you could borrow the money not pay, there's no interest due on it. Use the money to create the jobs, get the reimbursement, and pay off the loan, and you'd be, exactly in the same place. But it would give you the cash to actually hire those employees and start paying them the wages so that you can demonstrate you created the jobs.
Great. And the last question was just related to when is the best time to call for help? And I put the phone number again in the chat. And of course, it's right on the screen here as well. I don't know if you want to, if there's a best time to call. And also, I'm not sure we mentioned that help is available in English and Spanish.
Right. English and Spanish between 7, 8. There's more operators during the middle of the day, but obviously your time is maybe taken up during that time period. So you can even email us and ask us to call you at a specific time. We're certainly willing to, open to that suggestion. We're trying to make this as easy as we can on business owners. We understand the kind of pain you've been put through and the challenges you still have ahead of you. So we really are here to work with you to try to make this work. So if you need to just have someone call you, we're happy to do that. You just need to give us an email at either lita@nmfa.net or recovery@nmfa.net. Either of those work.
Great, thank you. And it looks like that's all the questions.
Thank you so much, Lynn and Marquita, for answering all of those questions for us. Greatly appreciated. We did have a comment here that said, thank you so much for the great presentation with great clarity. So yes, thank you, thank you. It's been a wonderful hour and almost 15 minutes with you, so we really appreciate it. And thank you for the wonderful collaboration between the New Mexico Finance Authority, the New Mexico Small Business Development Center, and the National Association of Women Business Owners, New Mexico. We want to remind you that the New Mexico Small Business Development Center is here for you to help you during any stage of your business, so don't hesitate to reach out to us. So thank you for joining us. Please visit our website at nmsbdc.org to view our upcoming no-cost webinars or to sign up for our no-cost counseling services. And yeah, thank you again to everyone. Have a wonderful Friday and upcoming weekend.